First up today, our newsmaker is Aaron Patrick from the Financial Review. Great to catch up with you, Aaron. The Reserve's hiked the interest rates to 3.85, up from 3.6. All the banks except the Commonwealth Bank said they'd hold. Were you yourself surprised?
I wasn't that surprised, Steve, because it just seemed to me that things were getting a bit out of control. Even inflation was coming down and was way above what the RBA wants. And one of the most interesting things is that house prices have been going up in Sydney. And I think that's a really strong leading indicator, and that's one of the reasons they decided to hike again.
Has the Fin, and I know you have, gone back and looked at, Aaron, just how many people who were on fixed rates are now starting to come out, and how much of a cliff they're now going to have to fall over when it comes to this last rate? I think we're at the highest cash rate now for 10 years.
I think so. I don't have the exact number of how many people are coming off the cliff, but it's considerable because a lot of people went onto it during COVID. And what you're seeing now is people frantically refinancing their mortgages. So there's actually this huge competition for borrowers going on, and banks are throwing money at lenders, and people are churning desperately to try and get low interest rates. And that's just going to accelerate as a result of today's decision.
And we've got a budget, of course, Aaron, next Tuesday. And, you know, there's going to be bad news in that budget, I would think. We've already heard today from Mark Butler that they're going to raise the tax levels on cigarettes by 5%. So people are going to really get whacked in the next couple of weeks, aren't they?
Well, I think people are getting hit by a combination of problems. Inflation is going up and it's not under control. Interest rates are going up, and so people are paying more for their mortgages. And now people are going to get slugged by the budget. So you've got this triple whammy, and it's all designed to basically push people out of work. It's designed to stop people spending, and so the unemployment rate goes up. That's the objective.
Do you think that the rate rise in the US in the last week or so has spooked the Reserve into doing what they did today? Do you think there was any chance, like most commentators said, that they might have held on, but they got spooked by the inflation rate here and what the American Reserve did?
They look very closely at what's going on in America. And if the Americans can't get inflation under control, that will worry the Reserve Bank here. There's also a problem that if the interest rates get too far out of whack between the US and Australia, you can have these huge currency swings, which can have a big impact on trade and our sales overseas. But I think essentially Phil Lowe, the governor, didn't want to look soft on inflation.